It's been quite the year for crypto enthusiasts out there. Bitcoin up more than 170%. And today we got the candle to put on top of the cake as the cryptocurrency topped $20,000 per coin for the first time in history. Want to see where it's trading right now, up above that $20,600 level right now. For more on all the enthusiasm in the space, I want to bring in our next guest. Travis Kling is founder and chief investment officer of Ikigai Asset Management. And Travis, I mean, it's good to have you back on, first of all. Second of all, crazy enthusiasm here, but the theme all year has been more on the institutional investor side, kind of driving adoption there from some hedge funds out there. What have you seen in terms of what's driving the latest push above 20,000?
Yeah, that's right. Thanks, Zach, for having me back on. So the last time we were here was 3 years ago. Real different backdrop in terms of what it looks like currently relative to 3 years ago. The move in 2017 was primarily retail driven, and this time around it's been primarily institutional driven. And it was really kicked off by Paul Tudor Jones announcing his Bitcoin position in May of this year. And then over the last, call it 90 days, as Bitcoin's price has essentially doubled, the dominant features there have been Grayscale Bitcoin Investment Trust buying and Michael Saylor at MicroStrategy buying. So just to unpack those two things for a minute. So Grayscale's Bitcoin Investment Trust, the holdings of Bitcoin that they have absolutely exploded. Since September 21st of this year, Grayscale has added 133,000 Bitcoin to their holdings. And that's Bitcoin that's never coming back out into the market to be sold again. It's in the trust essentially forever. And that 133,000 Bitcoin over an 85-day period of time is 1.7 times all the new Bitcoin that have been created by miners over that period of time. So you're truly sucking out, an incredible amount of supply in the market. And then when you look at Michael Saylor over at MicroStrategy, so between himself and company, they've purchased nearly 59,000 Bitcoin since late July. And that was before they announced the $400 million convert that was announced last week, that was upsized to 550 million and then closed at 650 million. And, it's unclear whether or not he has bought, taken that $650 million and spent some, all, or none of it on Bitcoin at this exact moment. But a direct quote from Saylor is that he's planning on owning this, quote, for 100 years. So
Travis, when you talk about the larger institutional players in this space, I mean, that would seem to suggest that there's not going to be as much volatility around Bitcoin that we have seen in years past. I mean, where do you think it levels off at? Is 20,000 the level that it stays at, or you think there's still significant upside?
Well, look, I run an investment fund for a living, so this is certainly not investment advice, but I would be shocked if it stays, anywhere even close to 20,000, to be honest with you. Stanley Druckenmiller and Paul Tudor Jones, a couple of the most successful macro investors of all time, most well-respected investors of all time. Like, it's not a meme that when they buy, other institutional investors buy. That's not like a turn of phrase. Like that's actually happening. And you're seeing a waterfall of these types of announcements happen. I mean, just last week you had Mass Mutual, a insurance company that's older than the light bulb, buy $100 million worth of Bitcoin and also take a minority stake in a Bitcoin company, NYDIG. And then just today and yesterday, it was announced that Ruffer Asset Management, a 20-something billion dollar hedge fund out of Europe, they bought $740 million worth of Bitcoin. And then there's another announcement, One River today, that has announced that they've purchased up to $600 million and have commitments up to $1 billion to buy through early 2021. So you really are seeing this sort of cascading waterfall of institutional interest. Yeah, that's not going to slow down.
Well, Travis, I mean, the other thing too is just kind of, I mean, we had the manager behind the Bitwise 10 crypto index fund on this week, and that's seen a 50% move higher each day over the last 3 days, up 56% today, giving people the opportunity to trade Bitcoin similar to the Grayscale trust that you're talking about there in traditional brokerage accounts. You're not normally supposed to see moves this high, considering even just, you know, the 5% moves we've been seeing in Bitcoin over the last few days. But I guess that would seem to indicate some enthusiasm still there from people who are outside the crypto world traditionally, who want to get in. How much of that do you think, because last time we saw this happen, it was a big boom bust. But this time, if you have institutional investors there to kind of quiet the market, talk to me about how it's different than just all that action being retail, and kind of how that, I guess, minimizes the downside risk, at least conceptually.
Yeah, so just to juxtapose where we are today in December 2020 with the backdrop relative to 3 years ago, friendly reminder that the Fed was trying to end the largest monetary experiment in human history 3 years ago by starting to raise interest rates and roll off their balance sheet. All of that has been thrown out the window now. They have no plan to end the largest monetary experiment in human history. And in fact, they're just going to keep going and sort of see what happens. And Bitcoin, as a non-sovereign, hard cap supply, global, immutable, decentralized digital store of value, is an insurance policy against monetary and fiscal policy irresponsibility from central banks and governments globally. And that's the exact thesis that these institutional buyers are getting behind to make their purchases and to get into their positions. Yeah. And it's the same drum that we've all been banging for a few years. So there's a lot of influence.
That's the interesting thing. That's the interesting thing for me, though, because we did see Bitcoin take a little bit of a drop earlier. Obviously, it was in the pandemic when there were a lot of question marks around that. Now, potentially back to kind of what we saw in the Great Recession. We're talking about things like that and what the Fed might be doing to maybe reel things in here. But beyond just Bitcoin, I want to ask you about Ether too, though, because that's a piece of the BITW index fund we were talking about just a second ago. And CME Group saying that they're going to offer Ether futures next year as well. How big is that to maybe drive Ether to catch up to Bitcoin here, and how investors should be looking at that as a different maybe play here in the crypto space?
Yeah, look, it's great. For those of us that have been following all of this real closely, we kind of knew this was in the works from the CME for an extended period of time, and it was kind of a matter of when, not if. But it undoubtedly lends credence to ETH as an asset, its investability. It makes it increasingly more available for more institutional types of capital to get exposure through that. And look, ETH is a very different bet than Bitcoin. Bitcoin is a non-sovereign form of money, and ETH is this sort of decentralized world computer. They have different use cases, different value propositions, but it's great to see some real interest outside of Bitcoin. It always helps everybody in my world when we've got more than just a single asset class.
Certainly a lot to get through to there. Appreciate your time today, Travis Kling, founder and chief investment officer of Ikigai Asset Management. It's good to talk to you today.
Thanks.